In this video, we'll explain how to invest in the stock market for beginners in 2023. If there's one thing we learned from 2022 was that the market can be volatile and the ones who were the least educated got burned the worst. So first lesson, don't be uneducated. But just because 2022 was a down year, don't let that deter you. There has always been down years throughout the history of the stock market. But the overall long-term direction is always up. The stock market, along with real estate, has been the two best places to invest money. When you look at what has performed in the past, the question is how. How do you go about investing as a complete beginner? Where do you start? What areas do you look? What tactics can you implement? What investments do I make? And what stocks do I choose? These are the types of questions we're going to answer in the video. Also feel free to click between timestamps if you don't feel that a particular section is relevant to you. Well, let's say you know a section already, but let's start from the beginning. To know why it's important to invest in stocks, you first need to understand what a stock is. A stock is a business. So when a business wants to raise money, they sell their business to the public on the stock market. This business gets divided into thousands or sometimes millions of equal portions. Each one of these portions is what's known as a share or a section of the stock of the business. So when you own one stock of, let's say, Apple, you actually directly own one small portion of Apple with a business. You are now a business owner. Now I've got a question for you all. What is the purpose of a business? Is it to serve the customers? Yes. To make a useful product? Yes. To make a positive difference in the world? Yes. To be honest here, the bottom line, the true purpose of business is to make money. That's a fact. The great thing about this fact is that when you buy the stock and become a business owner, that business is now designed to make you money because you own it. And that is the reason to get into investing, because you can buy stocks, businesses, throughout the world which have the sole goal of making you money. Even better, this money is passive. You are not working 9 or 5 to earn it. You are not putting on that suit and tie or Yvers jacket, laboring away to make the money. You can just sit, drink coffee, watch Leonardo Matti, the GOAT, play football or go surfing on the beach, whatever your hobbies are. Investing in stocks is passive, not active income. As Warren Buffett says, if you don't find a way to make money while you sleep, you will work until you die. If that doesn't wake you up and give you some desire to learn investing, or then maybe you should just work until you die. So how do we get started with investing in stocks? Let me show you the key steps to go through. And just to begin with, I want to say you don't have to be a millionaire to start investing in stocks. Investing is available to the everyday person. You can buy a stock in Disney for $90, Coca-Cola for $60, Apple for $140. The stock market is basically affordable to everyone. So in order to buy a stock, you need to sign up to a brokerage company. A brokerage company is a platform that allows you to buy and sell stocks. Now don't worry, this isn't $90.95. You don't need a dodgy broker from Wall Street to do your trades. Go with a well-established company with a proven track record. If you're looking for a very cheap broker, and you're just beginning your investing journey, Robinhood and Webull are quite popular, and you can buy and sell stocks for free with them. Or if you have a bit more money and you're looking for a platform that's been around for a lot longer, look into one like 12 Schwab or Fidelity or TD Ameritrade. They're pretty easy and straightforward to sign up to if you're living in the USA. Just Google them, go to their website, and fill out a form or two. And step 1, find a stockbroker. Done. Once you have a stockbroker, you want to familiarize yourself with a couple of terms before buying a stock. 3 key terms to come to terms with. 1 is a ticker symbol. A ticker symbol for a stock is kind of like a stock's nickname. It's an easy way to find the stock you're looking for. For example, Amazon's ticker symbol is AMZN, Microsoft's is MSFT, Disney's is DIS. Once you've clicked on the stock you potentially want to buy, there are 2 key buy orders you can implement. 1 is a market order. This is when you place an order to buy or sell a stock at the market's current best available price. A market order generally ensures that you will buy the stock, but it does not guarantee a specified price. 2nd, you've got the limit order. A limit order is an order to buy or sell a stock with a restriction on the maximum price to be paid. If the order is filled, it will only be at the specified limit price or lower than that price. That's why I personally like limit orders, but it's up to you. Once you have signed up for a stockbroker, you are now capable of buying and selling stocks and forming a portfolio. But now you need a strategy. If you play a game of football, you have a strategy. If you are in a chess match, you have a strategy. If you're buying stocks in the stock market, it's even more important to have a strategy. So you need to choose how you're going to play the investing game. There are 5 broad types of investing strategies that you can engage in. Let me start off with my favorite type of investing, which is value investing. You ever heard of the names Warren Buffett or Charlie Munger? This is the investing style that they use. The fundamental idea with value investing is to buy stocks that are undervalued where the value of the stock is greater than the price you pay. For example, when you go shopping, you like to find clothes or phone or items that are on sale. You want to find a good deal, a cheap price for a good quality item. Value investing